Welcome to Trading Lounge and the Bitcoin Ethereum report for Wednesday, July 14th. So, I'd been looking at this as our primary count here, as from the top as wave A here, then an A wave and a B wave and a C wave here for wave B, and then down for wave C. Now, we're going to go in and have a look at from A to B here and find out what it takes for this to end. And at the end of it, when we understand from A to B here, anything that comes further down than that, then we're going to have to look at a bearish count. So we're going to also have a look at some bearish counts that will take us a little bit lower. So we're just going to explore ideas. So let's cruise in on this one here, which I think I can just go to the 2-hour chart. And on the 2-hour chart, coming from the low here, first of all, is the A wave, the B wave, and then 5 waves up for wave C of A here. And then we've been working this A, B, and C wave back to this point. So we're very close to that now. So we need to understand the 5 waves, because wave C will have 5 waves in it. We need to understand from B to C. We need to know exactly when that's going to finish. And when it does finish, if we see a move further down past that, well, then we're going to have to understand, well, what can be the next structure within that. So we're either in a bit of a nutshell here before we go on. I'm looking for one more little move down and then a move up from that point. Now, if that's going to be the case, then we would need to see a classic trading levels pattern sitting on 2000. And on 2000, what you're looking for is simply the first high above the level, and you can go long after that. You can refine it further down and look for the second one. You know the classic trading levels pattern, which is this one here. So we would see coming up to the 2000, the arrival, you'd see a natural reaction and profit taking from that, and value buyers coming in and pushing it up, running out of steam, and then folding back, and eventually finding a balance point and moving up from that point. We can get a variation on that particular count, on that move, and that would be where it doesn't drop below the level here. But our reference point high is really important, and our second reference point here for that. And there can be a third pattern as well, and the third pattern is the overshoot pattern. So if we've got the 2000 here, we'll see the market move up where it doesn't stop here and just continues to move up, but it will fold back and eventually find the 2000 as the balance line through there. But these highs are important because they will trigger long trades at that point, buying new highs, so to speak. That said, let's go in and understand from B to C here, and we'll go to 100 ticks to do that. And we'll need to bring in some more data, so 10,000 should be enough. So we've been working through yesterday as the A wave here, then an A and a B and a C for the B wave, and then we're looking for a C wave to move down. The C wave from wave B to wave C, we're looking for 5 waves. So we've got wave 1 and 2 here, and then we've got 1 and 2 and 3 and 4 and 5 here for the third wave, and then this gets blown up here for the A wave on that top, and then an A and a B and a C for the B wave, and 5 waves up for the C wave of 4. And then we're looking down from wave 4 down to wave 5. We're looking for 5 waves. So we're looking down for 1 and 2 and 3 and 4 and 5 to move down. Now this wave 4 here, that does look a little bit impulsive there, just catching that, and that could be corrective. If the market moves above that little high here, then there'll be a C wave coming in here before coming down. Otherwise it will drop down here. So we could pretty much gravitate towards the closest largest number at 1900 here. Also too, if this market just starts to move up from here, this wave 1 low here, we don't want to see wave 4 being breached at that point. At that point I would have made a mistake, and then we would need to look at this as probably 1 and 2 and 3 and 4 and 5 here, but it just gives us overlapping wave structures, so it doesn't really make a lot of sense. But in one way or another, we've got 1, 2, 3, 4, 5 here. And also too, once this, let's just imagine this, let's just don't worry about that mess, let's just imagine that the market does come down at some point and hits 19 here, and that would be, that length there would be roughly the length of wave 1, so that would be fine. So it may go a bit lower, but after that, if we can see that the market moves up at that point, then this low here becomes important to short at that point. You may be able to bring that up to the second point here. We'll look at that in the next session. But yeah, so from wave 4 to wave 5 here, we're just seeing this finish off, and we will either move up, and if we're looking for that classic trading levels pattern that I just mentioned, then we'll see it's a bit like this in reverse, but basically. So this is the bearish one. So if I could just bring the bearish pattern up here, where we have the arrival on the downside, the bounce, the first low below the level, and then the market comes back up, and then here. So with that pattern in mind, we can look at this here. So we've got the arrival, the bounce, the first low below the level, and then the 4 here, and then back down here. We've also got a second retest here as well, but it's basically migrating from being support to resistance here. But we'd look at the opposite over here, so we would be looking at something of this nature, and this high here becomes valuable as a trigger, and this one here as well. Otherwise it can just fail from here and move on down, and that's why we'll have these triggers here for this, but we'll talk about that when it comes to it. So this low is extremely important. Okay, so let's just go back to a larger perspective here just for a moment. So in this case here, as I mentioned, we're looking for the A wave. We went through that. We're looking for the top. We were looking for a move down, an A and a B and a C. Didn't come back up to the 61.8% or anything, but anyway, we've got our correction, and then we're tracking 5 waves here. So we're just looking for one more little low here, and we want to see if that becomes the support or not, because if it's going to fail, and here, that's where it's going to fail from and come down from that point. And it's at this point here we need to understand, well, what does that mean if it comes down here for that? So we need to look at I want to have a look at a couple of different patterns, if that's okay. First of all, we could go here. I think that should do the job. So I just want to talk about further downside for a moment, okay? Now, I don't know if it's right or not. It's just ideas, so don't get upset. So this is one here where we've got a bit of a triangle kind of thing finishing off here. And if we find the 2000 as resistance, then it would be natural for this to draw a line through here and come down into this point here for this. And we can look at this as the A wave at that point. I mean, it's even possible at that stage to look at this as the A wave here and the B wave over here and the C wave finishing over here as well for that. But we don't need to go there just yet for that. But that's something we can work with. So this particular triangle-y pattern here, which would be an ending pattern, obviously the market's not cranking down like this here. The hash rate has dried up, the volume's drying up, the retailers are moving out, the wholesalers are buying it off the retailers, so there's a shift in wealth happening here, unfortunately. So yeah, how do we count that? On that basis, I've got a couple of ideas, and they're just ideas, and there's things wrong with them, you know, things wrong with myself as well. So, but we don't need to go there. We don't need to expose our weaknesses in public too much. Nice to know them, nice to be working on them, don't want to be in denial, all those sorts of things. So, yeah, don't go throwing anything just yet. So from the top here, we could look at this as 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here for the third wave, an A and a B and a C for the fourth wave, down for 1, back for 2, down for 3, an A and a B and a C back for 4 here. Yes, there is overlap. Don't throw anything yet. But then we would look for 5 waves coming down in this move here. So this one here would extend further down here and taking this low and that low over here to that, so bringing us down to, well, close to the medium level here in that regard. So that's one way of looking at it. The other way to look at it in here, I might need to bring in more data. Okay, that's helpful to a point. It's still the same. Is it still the same? Just checking, sorry about that. Yeah, okay, all right, still much the same. So this one will take us below this low here in this case. So we'd look for 1, 2 here, and 3, 4, 5 coming in here. Now, yes, there's problems with this, and we could probably count it differently, but I just want to bring this other chart across for a moment, okay? First, before I bring it across, I want you to understand that this move up here, I could, if we were looking at an ending diagonal pattern, we could look at this as wave A here, or rather the other way around, actually. We can look at this. Actually, I'll just bear with me a little bit here. Have mercy. It's just an A wave, a B wave, and a C wave here. We could, if it's an ending pattern, we could look at it as an ABC here for wave 1 here, and an ABC back for wave 2 over here. And if that's the case, then we would also have 3 waves ending in this pattern here as well, and then we'll do this a little bit differently, shall we? That's okay. Just hang in there with me, because I want to show you another pattern that gold went through. The nemesis. I don't think Bitcoin and gold are each other's nemesis, so to speak, but yeah, so 3 waves down here, and then from wave 2 down to wave 3 here, that would also be an ABC pattern as well, and then that would take us down here further for this. So we don't need to put that there for a moment. We'll just take these away. So it ends in a triangle sort of pattern, but it has still not going to be long enough. For wave 3, and then 4, and then 5, ending in 3. Now, I want to bring this chart across here. This is a daily chart, okay? And not that you really need to know what it is, but if you can't guess it, I'll tell you later. Or did I already tell you? So the market's cranked down here, right? And then it's had, well, I'll call it an A, and then we've got 5 waves here for an A, B, C pattern here, and then 5 waves up here. So it does make a nice A, B, C pattern here. Right, for wave 4. I can see that this move down through here is in 5 waves, and then we've got an A wave, and then we've got 3 waves here for a B wave, and 5 waves up here. So the logical thing would be to have wave 1 here, wave 2 here, and then we've got 5 waves down here to make wave 3. But then wave 4 comes up and overlaps here, overlaps wave 1, which is really what we've got over here as well. This here, if I go back to this other chart here, just for a moment, let's just bring this back into perspective here. So it's the same thing happening here as well. Just get that into space. So this wave 4 top here overlaps wave 1 here. So that's the same here. I just want to take you through this for a moment because I think it's interesting. So this moves up here as wave 4. It overlaps wave 1 here. We can just put that line in there just in case you can't see that. So there's a decent overlap there, isn't there? But then we've got this 5 wave structure down here, whereas this wave 4 here would also overlap here. I mean, we could call this an ABC pattern coming down here too. We could go and an A and a B and a C wave down here for that as well, because there's a good case for an ABC pattern in here, but it doesn't give me 5 waves here, so I don't need to go with that. So just looking at it in different ways of ending. So yeah, on this daily chart, we've seen this wave 4 here overlap wave 1 here, if we were counting this down for 5 waves from wave 4 to wave 5, because once this is finished here, this market just continues up here. This is actually gold hitting 1,000 coming down from the top, which a bit like Bitcoin has done. So we're in this section here, and then the market continues to move up from that point, as you know. But we're in this sticky spot down here at the moment, where gold was before. So the point is here is, this is what's happened to gold. Wave 4 has overlapped wave 1. You could look at this move down here, by the way. Correct way to do it is probably where you could go over to here. You could put this here, and you could put this as wave 1 here and 2 here, and have this as an ABC pattern. Wave 3 here as an ABC pattern. Wave 4 here, still overlapping though, and then look at this as an A and a B and a C pattern coming down here. So ending in that particular way, you know, that kind of thing. So I think this is where Bitcoin and Ethereum are, really. I think we're in some sort of situation like this, right? And I think we need to be a little bit philosophical about this. I think what we need to do, you know, if we are currently in this wave 4 overlap here, just saying, right? So if we go back to gold a bit and we say, okay, well, we're in this overlap situation here. Well, we've already overlapped, and we're halfway down here now. So with gold, we're already halfway down here now somewhere. So I think what we could say, sort of generally speaking, is that we could have something like this, how gold finished off coming into this low here. And it's very ugly and very confusing, but I think the takeaway from this is that, yes, it's ugly. Yes, if we're about here at the moment, right? So in Bitcoin. So with Bitcoin, I think we still need to look lower. Right, we still need to, with Ethereum, sorry, same thing, really. We're about here in the structure. We still need to move lower. So, yeah, we can either, understanding this, we can either panic, or we can go, well, fantastic. That gives me all of this time to save up money to buy Bitcoin on the low, on a low down here. That's what I'm thinking. So I think that this can come lower here. So I think we could end up at 1,500 here, like the sort of taking out another low here at least, and shaking this out here. That would probably give me this count here a bit better. Coming into this 1,500 here, that's kind of what I'm thinking. So if Ethereum here has another little low here, like I explained, and then goes back up and retests the 2000, then that would be the short trade. But more so, that means that would drop down to the next level from 2000. There is another level in here, of course, and that's the 1800. So that will be important, but only important in the way of actually becoming, well, arriving as the support and eventually coming as the resistance there. And the 1800 part of group 2 as well, which would capture these lows here. So that's what I think with Ethereum. So just to recap this somewhat, we've got, let's go back to the 2-hour chart here. We've got this possibility that we could have the A wave down here, and then the A wave up here, then an A and a B and a C for the B wave here, and then going up for the C wave here. So we know now, right on the low here, that we've got one more little low, and we either find this as support here or we find this as resistance, and this will be the sort of do or die situation at this point. And if that fails, then the market's going to come down. It's going to squiggle around the 18 for a while, but eventually hit down into the 15, and so we'll be looking for our lows down in that space. So anyway, just food for thought. I thought that it would be a good time to look at that and try to find an example. And gold end up giving the best example here. So with gold, we're kind of really about here somewhere, you know, and we're looking at the 2000 area through here. Okay, too many objects on the chart, so I need to remove those. And let's have a look at Bitcoin. Okay, Bitcoin. So once again here we have 1 and 2 and 3 and 4 and 5 here for this, for wave A. And we were looking for wave A, B, and C to the upside here. That's still possible at this time. It hasn't broken down, but we also need to understand at what point would it break down, and what point would we need to look to go lower. So that's what we talked about yesterday. And we need to carry on that today. So the A wave here from the low here can be in 5 waves or 3 waves. So we can look at this as an A wave up here, a B wave back over here, and then a C wave back up here for the A wave. So that's what we're going to look at first. So we're just going to zoom right into the hourly chart and pick it up from that low. Let's just bring this in here. So from the low here, we can look at this as the A, the B, and the C wave here for the A wave. And it's a little bit complicated here, but from the A wave here all the way over to the B wave here, and that would be an ABC pattern. So we're looking for an A wave here, then an A and a B and a C wave here for the B wave, and then down for the C wave here. So it looks like we can be pretty close to having a low in here already for this. What we decided to do was also that this 32,000 within group 1 of 30,000 as a major level, major TL3, and we've got 1, 2, 3, a minor level that makes up group 1. If the number 2 here, in this case the 32, becomes the retested resistance, then we would need to have the first low below the level, and then we can look to short below that. But that needs to come in first for that. That will be our setup to the downside at that point. And then, of course, there's going to be a bounce off the 31 and also the 30 as well. So we need to understand this little move here, which we were doing yesterday. So let's just cut straight through to the tick chart and have a look at that. So we've got some sort of understanding. So this was the move here. So yesterday from the top here, from the B wave down to the C wave, we're looking at 1 and 2, and we counted down here for 3. We were looking for wave 4 yesterday. So that's played out. Here's an A and a B and a C wave to this point here. And then we can see that it's likely that we'll look at this as 1 here and 2 here, and then all of this here as a third wave here, because we can see the 1s and 2s in here and the strong third wave and the 3rd and 4th here and the 5th here. So it looks like 1 and 2 and 3 and 4 here, which is rather high. I understand that. And then 5 waves down here for wave 5 to finish that off. So I think that we can call this in here as the low. This is 32,000 here. We'll also look at the bearish count in a moment as well. So let's just say that we take this length here and we put this. It's really this consolidation here for this basically. So let's just assume for a moment that we're either going to go straight up through all of this, or we're going to come up to this space here in 3 waves into these highs here somewhere, and then we're going to come down again through this. So in the journey going south here, we'd be looking at a classic trading levels pattern at the 32,000. So it may be quite simple like this and nice and clean. If that's the 32,000 there, that might be nice and clean like that and drop there. Or otherwise, this first low below the level, that's the one that you're looking for. That could also come back up above the level there and get a little bit messier as well. So coming above the level and then coming down. So a little bit more patience is required, but all of these lows are triggers. Okay, so that's that. Let's just see how that plays out. And that 32,000, just in case I've got some wave wrong here, you probably could short it just here, but I think it's just good to wait for I haven't deleted enough things. Wait for that setup there for that. Okay, so let's go back. So that's, we're calling that in as the low. So if that's breached and that 32 becomes the resistance, then we're going to be going down further. So let's just go back to where were we? We're at the daily chart here for a moment. So we need to look at, that's the expanded flat one. That's not the one that we're working with at the moment. This one here. So now we've got to work out, well, if that's going to be the sort of, the low thing that we're looking at here for this, if that low's in place for that, we're expecting that to pop up in here as an ABC pattern. So let's see how that goes. But what happens if the market drops from that point? So we need to look at that. So there's a couple of ways we can look at this. I mean, what I have been saying is from the top here, I've called this down as wave 5 here, which is sort of okay. But it's also possible that this here as an ABC could be wave 2 here. So down for 1 here, back for 2 here, and these can all be a series of 1s and 2s in here and then dropping further. So in this case, this market will drop down realistically looking at this. If that's wave 1 here, and we have pulled back to the 61.8% here for wave 2 here. So if that's the length of wave 1 here, well then wave 3, you'd think would be a little bit longer, and then we've got wave 4 and 5. So coming down to the old highs at 20,000 would be about right, really. I mean, because currently around here we've had a 50% retracement level, roughly speaking, and a lot of the crashes have been 80%. Some of them have been 90+%. So yeah, let's cruise into this, have a look at, I'm not sure, check out the 4 hour first. So this was one way of doing it here. So that at the 32, we talked about that yesterday. I don't need them. I need to get more space on my charts for this at the moment. Don't need that one. So yeah, so we've been talking about this. Instead of wave 5 here, we've got wave 1 here, and then an A and a B and a C back for wave 2, then down for 1 and back for 2, and then down for 1 and back for 2, then down and 1 and back for 2. In fact, I don't particularly like this as 1 and 2 here. I think that the best way to do this really is just move this out of the way for a second, is actually put wave 2 here and wave 1 here, with an A wave here, an A and a B and a C wave here for the B wave, because it just looks like it's in 3 waves here. This this move up here just appears to be looks like it's 5 waves rather than 3, but either way it doesn't really matter that much itself. And then we were looking at this being 5 waves down. We just counted 5 waves down for this, so this would be wave 1 here, and then this would be wave 2 coming back here to the 50-60% retracement level. Don't have any 3s here, but so wave 1 and 2, 1 and 2, 1 and 2, 1 and 2, and then down here quite strongly through this. So I don't know if we're going to turn and go up from this point, or we're going to go up a little bit for wave 2 and then pull back down and move lower at that point. So it's just really a wait and see, and it's not like we're in a trend at the moment, so we shouldn't be any, I mean, hodling and buying it in different time frames and at different prices is fine, but this is not a game for trend traders at the moment. Intraday traders, it doesn't make any difference what day it is, of course. So it's really the position trader that's going to, that, you know, doesn't have an option here at the moment unless 32 becomes the resistance. And on the long side, we'll pick that up tomorrow. Let's just see what we get first. If we get a nice impulse wave up here, then we'll know that we're looking at the original count, which is on the 1 hour chart here. In fact, I don't need these while I'm here. Let's just, I need to get more. So yeah, this is the other one. So it's a bit of a catch-22, this whole process, you know. So the A wave here with an A and a B and a C wave here for this, and finishing here, and then just moving up from that point. So you can kind of see, I mean, you can see the danger in being long or short here at the moment, you know, as a position trader. I just don't see a setup here to be had at the moment. And as I've been mentioning, all we can do is monitor the situation until something becomes obvious, or we get a trade set up that we like. And I just haven't seen them as yet. So yeah, I mean, we've spent all of last week and this week moving through this particular pattern through here and working it out, and that's okay because the market hasn't really gone anywhere, and it's in a way it's done what we've expected it to do, but we're still tracking two counts that could go either way, and it will become apparent shortly what we've got here. It's just not going to happen right now, and yeah, I mean, I knew that even coming into this space, and you know, we watched this pull back up a little bit higher than expected, and then this down, and so yeah, everything's sort of on track, even though I don't know what direction we're going to take just yet for this. So we just got to wait a little bit. But I'd probably say 2 to 3 sessions and we'll be on a trend going one way or the other. So just be a little bit patient until we get things worked out. And as I mentioned before, any of these tops being taken out, currently this top here, then we're definitely bullish at that point. So the next step we've got to do is that if that is 5 waves down here and the lows in place, we've got to look at, do we get 5 waves up here or 3 waves? That's going to be the difference. Just want to check on this. Sorry to go quiet now and again. Sometimes I just need my own mind for a moment. So this is the 50-60% retracement level. It's really quite high, so we won't know. And once that moves up there, if we can work out that it's corrective or impulsive to the if there's 5 waves to the 61.8%, we're bullish. If there's only 3 waves to the 50-60% area, then we're bearish, and then we'll start looking at that. So we'll be able to start looking at positions tomorrow for this. Alrighty, well, that's it. Let's see what the market gods deliver. Okay, thanks for tuning in. Cheers.